All right, welcome everybody. We are back with another edition of Top Trades Live. I'm here with Enrique. Enrique, how's it going?
Getting ready for Yankees playoffs here in a few hours. So big game against the Red Sox at the stadium. So I changed up the outfit a little bit. Usually I'm in the Maverick shirt.
Yeah, I'm not in a sports mood today, or I would pepper you with questions about it. Everything in Baltimore is going wrong with our sports.
The Ravens, man, like what the heck's going on? Like
Yeah, it was a tough watch. I turned that one off at halftime. That was a that was a tough one, and the O's, the offseason doesn't look like it's going to go any better. So we will see.
I I don't want to make this a sports talk. I'm optimistic on the Orioles. First off, it can't get worse. And maybe this year they'll spend the money. Yeah, I think you and I were talking about this the other day.
Yeah, I
Um,
hope so. I hope that's the case because I do love my baseball. So we will see. But yeah, we'll see how the Yankees do tonight. It's October. I can't believe it. October starts tomorrow. I can't believe September is through. And we made it through scary September without any volatility at all, really. Pretty insane.
Yeah, like I mean, the seasonality. Look, what we were just talking about with seasonality, or we were talking about actually the government shutdown, which we'll talk about in a second, is all the time when we talk about probability and look at seasonality or any probability. We'll talk about something like it's 80% chance that it's going to happen. That means there's a 20% chance it doesn't happen.
Yeah.
So, I think that what we saw a good, what I believe was a high probability setup for a pullback, into the August September period, and it didn't play out. But that comes down to probability. You're sitting at blackjack table and you get a 20. Dealer can still hit 21. So the question is, sort of where do we go from here?
Right. And I mean, I'm not complaining about it by any stretch of the imagination. I mean, a smooth ride is nice, less scrambling and all that. I mean, we were talking last time about how selfishly, at least I was talking about how selfishly I would like to see some sort of a gut check or pullback into late October just to reset things for, melt up season. And I think it's important not to get confused with our wants with the reality of the market. We could want something to happen, but if it's not happening, you got to go with what's, going on in your screens right in front of you. You can't force it. You can't bend the market to your will.
Well,
So
and I'll say that even different. Look, I always want the market to go up. I always want the market up 30% a year. That's better for everyone. That's better for America. That's better for everyone on this call. It's better for me. But it's about respecting what's happening out there. And look, I haven't been overly bearish. I mean, at the Maverick, we have maybe 15 positions, and 3 of them are bearish out of maybe 4 out of 16 positions. We're losing money on 3 of those 4. The other one we're up 50-60% on.
yeah,
But that means that we have 11 or 12 positions that are quite bullish. So even as I had a tactically bearish perspective, we were overwhelmingly bullish because we're in the middle of a bull market and we respect the bull market. We respect the greater trend. And, one thing that I've told people is, like, the way I look at it now is we got through that period. And so I was wrong. We didn't have a big tactical pullback.
hmm
The seasonals that we're going to be looking at going into Q4, especially with the market being up double digits going into, if it's up double digits going in November, which it most certainly will be, the seasonals are absolutely incredible. Like, I posted something to the internal board showing that in Q4, you're up like 75% of the time. When you're up 10%, you're up like 85% of the time.
yeah,
So, what I'm actually going to do in the Maverick and even some of my personal stuff, each of the next 4 weeks, I'm going to cover 1/4 of whatever short exposure I had out there. And that's sort of respecting the fact of where we're going into seasonality, respecting the fact that the trend established itself in a different way and moving out of the way. But it's also not just doing it all at once. It's sort of saying, I know we miss this, but in the next 4 weeks, I still think this is the final period of potential volatility that we have to navigate. But yeah, we had a thesis. It played out different than we thought. Now we react accordingly.
yeah. And right on cue in the chat, John says, "What if we get a government shutdown?" Which feels inevitable at this point. I think that the meeting yesterday, from what I read, I didn't really watch any of the press coverage, but from what I read this morning, it feels like we're getting a shutdown. And uh, from my perspective, this is all performative. It's it's Democrats taking a symbolic stand here. I think the only question is how long does it go, and how much can the market tolerate it beyond a week, 2 weeks? We're not going to get any data while the government is shut down, so that I think that maybe removes some potential negative reactions. But at the same time, I think, like you were saying, maybe folks are going to get squeamish if this thing goes on for a while.
Well, I think I know I was talking about this at the beginning of the month, beginning of September. I had said that I felt that this government shutdown sort of felt inevitable.
Mhm.
I don't think the Democrats really have been able to show any traction fighting back against, Trump and what he wants to do.
Yeah.
And they sort of have nothing to lose at this point because it's so bad. And on the other side, I feel like the Republicans have been able to, and Trump have been able to get so much of what they wanted to get done, whether it's working or not. I'm not even going to get into that I feel like they're ready for a fight. And what's interesting is I posted on to both. I don't know if they posted at the daily feed. I think they did, but I posted on X Twitter. I have a chart that goes through all the government shutdowns that have happened since 1980. And what I'll tell you is that actual government shutdowns, not threats of a government shutdown, where we actually shut down the government. And what's interesting, looking at this table, this chart, the average shutdown is about 5 days, 6 days. The
Yeah.
median is about 7 or 8. But the longest shutdown, and I'm sorry, folks, when I'm looking over here, I'm looking at my screens. The longest shutdown was during the last Trump administration. And it happened at the end of 2018. And we were shut down for 35 days. I don't know if people, and that was in December of 2018. I don't know if you all remember what happened in 2018, but basically the market got smoked in December. The market was down 16% just in the month of December of 2018. Yeah. Now, I don't think that's going to happen here, but I guess my point, and just so let me put one other thing, the market had been at all-time highs. On October 3rd, the S&P was at an all-time high, and from October 3rd to December 28th, the market actually was down over 20%. So my point is, I agree with you that historically the average outcome of these government shutdowns, it is performative. It doesn't have an impact on the market. I also agree or think that intermediate term, it doesn't mean anything. After the market went down 20% in late 2018, it just ripped higher again. It was a total V recovery. But I want to respect a little bit, and this is why I'm only covering stuff, one a week for 4 weeks, is that if you asked me, are we more in a setup of the potential for a 35-day shutdown or a 3-day shutdown? I got to go 35. I don't, if I'm the Dems, I don't see why I don't. You still got a year to the elections. So, yeah. So look, I think that is a real risk. I think the market will eventually be fine. But everything that we've been saying before about the market being highly overbought, breadth has been okay. Yep. But like I heard this morning on CNBC that there were 16 or 17 up days on the S&P 500 out of 22, 23 trading days this month, and 8 of those or 9 of those actually had more stocks down than up. And we see that in portfolios. Like when I'm looking at, so some breadth measures are good, but a lot of stocks haven't done anything. So, look, I guess in some ways I'm less cautious and getting ready to move to uber bullish, but I think we're not out of the hurricane warnings yet. Hurricane season is still here, and the government shutdown, I think, is absolutely a catalyst for what could happen next.
And there's some big actual hurricanes in the Atlantic right now, aren't there?
And there's actual hurricanes as well.
Well, you're talking about a shutdown here and what's going to happen. And also, we do have a lot of stocks that are overextended. That's also true. So I wouldn't be too surprised to see, whether shutdown related or not, some of these speculative names start to pull back. And we're already kind of seeing that in different spots. We're kind of seeing this rotating drop in some of these speculative sectors, like for instance, like the quantums. The quantums look like December 2024 again. They were going straight up like IO and Q. I mean, this thing just absolutely rocketed straight up through mid-September into last week, and it's been kind of straight down ever since. So it wouldn't surprise me to see some of these hotter sectors reset a little bit. And if that happens, that's not the end of the world, obviously. But I wouldn't be surprised if things were flat-ish, and the market was relatively quiet, and yet we still saw some of these hotter groups, some of these hotter spec groups pull back here, because it's starting to look pretty darn frothy.
Well,
And
and at the same time, you see something like your favorite stock, Robinhood. We said that we were going to rename today's call, the Robinhood call, and talk about nothing but just buying more shares of Robinhood.
I know,
YOLO into Robinhood. I mean, holy cow! What an incredible. I in another publication I recommended this actually in November at $22 a share, and now it's a five bagger in a year. I mean, so look, I think that the speculation is out there. I think for everyone, the rules still apply that we talk about all the time. If you've got massive gains, if you had a big gain in IMQ, it made sense to take some profits. You have a big gain in Hood, makes sense to take some profits, for trading accounts. And then it looks good to buy some laggards. I want to talk about Bitcoin today,
yeah.
which I think is very interesting.
Mhm.
But I do believe, and I wrote this in Truth and Trends last Thursday. I hope you guys got a chance to read it. I'm actually very, very constructive. If you ask me melt up or melt down in the next 16 months, I'm going to go with melt up. Not to get too expansive. This reminds me a lot of late 98 when the Fed was cutting rates post LTCM, long-term capital management,
Yeah.
with the market near new highs. And what happened in 99, S&P was up 25 and the NASDAQ was up 84% in the year. So when I say that, that doesn't mean go long NASDAQ call options with 100% of your portfolio, but there is a possibility that that can happen. And I think that's something that we want to think about and participate in, because most market environments, I don't think an 84% up year in the NASDAQ is much of a possibility. But you ask me right now, can we get a blow off top in the next 12 months? I got to tell you, it's as good a chance as I've seen in 20 years that something like that could happen.
And remind me of some history here. In 98, what month was long-term capital? Was that August, September,
Yeah,
or?
August, September. So basically, it's a longer story, but the Thai baht had fallen apart the year before. You had a Mexican peso crisis, and so LTCM, which was I say super leveraged relative to some stuff we see now, actually wasn't that leveraged. But I think the world was just a lot less sophisticated at that time, and it basically went under in August into September, and the Fed came in really quick with 75 basis points, 3 monthly cuts. I mean, I can pull up Fed funds here, but off the top of my head, I want to say September, October, November.
Right.
By the way, the Fed the next year was raising rates because they saw how overheated we were getting in Internet 1.0 and all that.
Mhm.
So I don't know that that's going to be the case here, but I'm going to go back to that. Look, we've got accommodative Fed policy with M2 money supply at all-time highs and accelerating.
Yeah.
I don't want to be intermediate term short that. Like, that's not something you short. You do not fight the Fed in an environment of positive economic growth. I think we could see a really similar setup relative to what we saw back then. I'm just pulling up the chart right now of 1997 to 2001. They cut rates in September, October, and November. Yes.
Yeah. Yeah.
My 27-year-old memory still works.
So rate cuts into a hot market is gasoline on the fire is essentially the takeaway.
That it's essentially the takeaway,
Yeah.
and we had a V out of LTCM in late '98. And by the way, I remember it well. Everyone was everyone in late '98, even though we were in the context of the internet bubble, everyone was like, "Oh, this is a recession here," because we had been through a mild recession in '94, '95, and then '96, '97. Even though we were great for the market, weren't fantastic for the economy, and then everything just flew. So again, what does that mean? I don't know. It means good things for our strategies. Your strategy crushes it in a blow off top. My strategy just continues to churn out returns. But we continue to live, and I talked about this last week in the Maverick, in this like you can live in two spots at once.
Right.
We know there's still risks in the next 4 weeks, but we know we're building up into positive Q4 and a potential blow off top. It's the stupid blackjack example that I give, is that you know that you're going to lose technically the majority of the time, even if you play perfect blackjack, but going up to the table at any given point, the probabilities are in your favor. And that's kind of how you have to exist as a trader to be successful.
Yeah, just keep plugging away at what's working, knowing that it's going to turn on you at some point, but you're doing the right thing. So let's expand this idea a little bit to answer some questions that are popping up in the chat right now. So let's say that the government shutdown extends a little bit longer than we think, or that the market thinks right now. People get a little uncomfortable. What happens if stocks start going down? Do we see this absolute ripper continue in like precious metals? Do we see crypto catch and run? I think that, I mean, we've talked about this. Gold and silver are overextended to the max right now. There's no two ways around it. I'm not bearish on precious metals, but I do think we're going to need to see some sort of reset here at some point. I feel like it's inevitable, and I'm sure you generally think the same thing. But what about Bitcoin and Ethereum? I feel like we're setting up for the start of a big rally right now in the coins.
Well, let's start with gold
okay.
and go through. You're absolutely right. I mean, I hammer home to people that you only actually make money in gold and precious metals in risk-on markets. In down markets, they outperform because they don't go down as much, but they generally go down. And so you want to know why I know we're in a risk-on environment and potentially a giant melt-up? Because look at what gold's doing. Mm-hmm. And so I'm going to tell you something. If we get a government shutdown pullback in the tape, I think gold's going to get hit just as hard as everything else. I know everyone's like, "Oh, there's no way that could happen." Gold is a defensive asset, but that's not a defensive asset chart. That's a momentum chart.
Yes.
Okay. That's a meme stock right now. Okay. So in the intermediate term, gold will act defensively, but in the short term, meme stock going to meme stock. And so, if we get a pullback in the market, gold's going to pull back right with it. Now, on the other side of that, let's pull up Bitcoin or Ethereum. You can start with Ethereum. I put a chart up again that I think they put to the daily feed. We've had 2 tests here go, that first test back in August, pull back, second little test to the 50-day. Mm-hmm. I think this one is now consolidated nicely for a couple months. Yeah. And if we load up into Q4, this is at 6,000. Okay. So, to put that in perspective, that would be like 4,500 on gold or 5,000 on gold. Yeah. And the one I like as much, if not more, is take a look at Bitcoin, which has had a beautiful base. And if you can, pull this chart back a little bit further, pull it back 18 months. And, this is very similar to the consolidation. Yeah, there we go. The consolidation that it saw last year before it just absolutely ripped into Q4. Now, people will say, well, yeah, it ripped because of Trump. And I don't disagree. But you got to remember, too, when Trump was elected, he had said that he's pro-crypto. And I think we all believed him, but we had no idea how pro crypto he was. We had no idea he was going to make $5 billion off of crypto too. But, and so I think that I love this chart because I feel like if we get a 10% pullback in, 5 to 10% pullback in the S&P, Bitcoin's going to go down. It's not going to go down more than the S&P, and it very well might go down less. Gold will go down, I think, as much as the S&P if we get a 5 to 10% pullback. Meanwhile, if we get a 2% pullback and we go to new highs, I think Bitcoin could be at 125, 130 at year end. 10, 20% higher. Because the other thing is, once Bitcoin moves in a stair step function. I don't know if people know what that is mathematically. This is a linear function. Okay. You just kind of go up in a straight line. A stair step function is you kind of go here and you go, foomp, now you're at a new level. Foomp, now you're at a new level.
Yep.
And I think that's what happens to Bitcoin. So I'm, look, we're tactically concerned. I wouldn't buy new positions in gold with 1,000-foot pole because it's that overbought. It's not that I'm bearish gold. I guess I am in the next 4 weeks. But I think you can be buying these. And this is something we've done on this call over and over and over. We sell the ones that look like this and we buy the ones that look like this.
Yeah.
All of them look like this. So that's a very, very simple trading rule. So I think that crypto, the majors, Bitcoin, and pull up Solana, by the way. I haven't actually looked at the chart.
I haven't looked at that either. Wow. Yeah, I like that too.
Okay, so they're all good. They're all good. They all have nice, healthy pullbacks. They look a lot healthier than the chart of Hood or the chart of gold. Meaning that let me say that different. All those charts look very healthy. They look a lot more attractive tactically.
Yes.
Meaning that right now is a point that you could have an entry point and feel good about.
Yeah, look, I mean, everything that you're saying right here makes total sense. I would not be a buyer of gold here, but I would definitely be a buyer of Bitcoin, Ethereum here. It just makes more sense. And I mean, Ethereum, the way it's been going and the way it likes to dip, and I drew this little line here. I love to see Ethereum undercut a little bit of support somewhere, anywhere. I know it's didn't even tag its 100-day here, but I mean, just to see these dips and rips, it's exactly like what we saw back here. And again, going back to your stair step description, which I think is perfect. That's a great way to talk about it, is you get these moments of extreme enthusiasm and then the chop that comes after him once the Johnny come latelys are sucked into these trades, and then these gut check dips. Man, I mean, look at that rip off of the July 22nd lows here. You get a move from 2,200, I mean, all the way to 3,800. What a rip right there. And
I had bought a little bit right before that, and then it kind of rolled over. I feel like we're kind of there again. It's that it's testing people, but the setup is real good. So this feels very similar to that in terms of the possibility. And when this moves, it's not going to move. It's not going to go up 3%. This Ethereum has been stair stepping as well. So I think that all of these are trading this way, and I think it's an opportunity right now.
Yeah, and the way Ethereum has been lately, I mean, Ethereum 8,000 by the end of the year, I don't think was too crazy to say if it really gets going. I mean, Tom Lee, I think I was looking earlier, he says 12 to 15. But he's
well, what time frame is Tom Lee say 12, 15? It's not
by the end of the year. By the end of the year.
Okay. Wow. He also said Russell 6,000 last November or whatever. So I love Tom, but and he's not the most objective observer on Ethereum at this point either. So
no, he's definitely a permeable when it comes down to these things, but he's been pretty darn close and right in a lot of these instances, and so I would not be surprised if we got an absolute ripper with Ethereum. And that's why these moments here, I like these. It's an easier buy than trying to catch it on those big bars higher. That's a tough hold your nose and buy when those happen. But these dips, even if we retrace here, I know it looked like we were curling higher to start the week and everything's kind of down today, but I mean, even if we curl down, let's say we have some shutdown selling 3,500 in Ethereum, and we get a bounce off that. I'm buying green candles off of that right there. I feel like that's a good play.
So there's a lot of questions here. Someone I think was joking about Fartcoin. but questions about XRP, questions about Tau, which is a little bit of a different situation.
Okay.
Look, I think that if we're right, all of those are going to work, even Fartcoin. But Tau perhaps being a little bit different. I just, if you're in a setup where everything is consolidated and you can buy the best houses, why not buy the best houses? And why mess around with the crappy houses?
Yeah.
So I think that with Bitcoin and Ethereum and Solana at really attractive levels, tactical entry points, I don't know that I'd mess around with altcoins.
Sure.
Yeah, you might get more bang for your buck, but also what generally happens is we should come up with a term for other than altcoin, lead coins,
Yeah.
benchmark, blue chip coins, whatever,
I
blue
like that.
coins. Those will move, and altcoins won't do anything actually. So I think that I just wouldn't bother. And if what I do, but this is me because I don't like swinging the bat, I'll buy leveraged ETFs into.
Yeah.
We recommend on this call ETHT. We recommended BIT. I don't think I've recommended BITX, but I'm going to do it here again. Here we go. Official, non-official call. I would buy the leverage ETF in Solana, SOLT. I'd buy ETHT, and I'd buy BITX. I think those are really, really good plays into early January. So again, official, unofficial call on top trades, where I think my track record is pretty darn good.
Pretty darn good.
For what it's worth.
Yeah. Yeah. And like what you're saying about altcoin, I mean, if we want to call them that, the altcoins, the meme coins, stuff like that.
I personally like the term, and I only use the curse word once, shit coins. But
no, I like that
yes.
too. No, that's fine. Hey, I had Chris Cimarelli on, and I almost needed a bleep button when he was on last time. He was dropping some F-bombs and everything.
Yeah, I don't. In real life, I do, but I try to not in these calls. So,
but no, I feel like the what history tells us about the shit coins is that you get these very quick boom and bust cycles within them, and they're lotto plays, and so they go down just as fast as they go up. It's tough to control. I mean, we could be in a situation like we saw in early 2021 where people are flipping JPEGs and buying the fart coins and all that. It's entirely possible, but
well, I think we, to a certain extent, we are. They're just called IonQ and Oklo.
Yeah, I think that's fair.
And but I feel like if we were to go to an example here, this feels a little bit like late 2020, where we began to see some of that come up, of that activity bubble up. We were coming out of an economic disruption, by the way, without a doubt. The tariff tantrum, tariff threat, tariff terror, I don't know what we're supposed to call this thing, was some degree certainly of psychological trauma. And I get late 2020 vibes here. And what happened in 2021, I want to remind people that the market actually went higher through 2021, but everything kind of peaked in right at the end of the first half.
Yes.
Because the second half of 2021 was not a great, I mean, it's good for traders. I mean, it's always good for us, but the market kind of churned. So I think we have begun the NFT market again. It's just the NFT is called Oklo, as opposed to a picture of a hot dog or whatever the hell it was.
Yeah, that's fair. And it goes back to the things we talked about before, where speculative money is speculative money. Like pick your vehicle, but it's the same idea. And OKLO looks a lot like IONQ right now too, where
it's the same chart. It's the same chart.
There's a lot of these charts out there.
And hold on one second. I don't know that you can do this on there. Pull up the chart of gold, and it sort of looks like that chart too.
Yeah, it just hasn't rolled over yet. But
it just hasn't rolled over yet. It's the same chart. That's the same chart as Oklo and IonQ. It just hasn't rolled over.
Yeah.
So, this is my point, is speculation is speculation. I don't care if you're doing it in the most safe, asset on the face of the planet. At some point, if it becomes speculation, then you're going to be subject to rules of speculation in the short term. So,
and that's a great point. It goes back to what you were saying earlier. The character of these assets changes over time.
in the short term is
Yeah.
what I'm saying. Yeah, absolutely. Is gold has become a speculative vehicle. And gold will churn out of being a speculative vehicle when the price is back on the 50-day and 100-day moving averages.
Yeah, because all that hot money will go somewhere else.
Exactly.
And the character will
Okay.
change.
Now Oklo and IonQ, which I think both probably go to zero, will remain speculative assets. Gold will not. But right now, gold is, you can call it slumming or luxury vacationing as a speculative vehicle. Probably luxury vacationing.
Yeah.
It's YOLOing out
Right.
at the moment. But when it goes back to the 1500-day, then it's going to be gold again. But for right now, don't if you make a lot of money really fast, absent a company that just raised numbers a ton, you now are engaged in some degree of speculation if you don't take profits. Yeah. I'll say that. I think that's probably one of the hardest things to understand is that if you own a secure asset, you own a safe, stable asset, and you make 50% in like that, well, then you now it's become a speculative asset in the short term. And you should just treat it as such, or just be patient. Look, I think gold goes to 5,000-10,000. By the way, I think Bitcoin goes to 1 million. So for long-term accounts, just hang out. All I'm saying is that I think both gold and silver, in the next 3 months could be down 10-15%, no problem.
Yeah, absolutely. And a lot of it comes down to the things that Enrique and I talk about. We have to set aside those bigger fundamental, bigger trend pictures when we're talking about the shorter term tactical viability of these trades. That's what trading is. That's what it comes down to. So you have to kind of compartmentalize your thoughts on these things. Yes, two things can be true at the same time. Gold can be this, exactly, this store of value, this inflation fighting asset, but it can also be a meme stock trade at the same time. And you just have to realize when these things are happening.
This is what I would say. Trading is about being able to exist in two contradictory truths at the same time across the spectrum of time. Okay, to be a successful trader. And I think that's just so hard for us to say, I am going to win, but if I play out the full probabilities, I'm guaranteed to lose.
Yeah.
Right. But that's actually what trading is. If you're disciplined, you've got a good plan and you do that. So I just think it's a lot of the things that make a good trader are, well, I'm going to say this, there's a reason for this. A lot of the things that make a good trader go absolutely contradictory to human nature.
Yeah.
So why does it make you a good trader? Because human nature is what everyone else is doing, and you're taking advantage of their fear and greed. So, by its very nature, being a good trader is in some ways contrarian to take advantage of the failures of everyone else.
Well, thinking more along those lines, artificial intelligence, obviously, I don't want to say it's a meme stock right now, but we are in a boom, a bubble, if you will. I mean, people are excited about it. The same is kind of true about quantum and the quantum ideas, but longer term, and tell me if I'm right about this, I would say you're more bullish on AI in the near future than you would be on quantum. We're farther out from quantum because you have some kind of bearish ideas about some of those quantum names that are ripping in the longer term. You think maybe that's pie in the sky stuff and that we're not going to see it anytime soon?
I mean, where do I start with this?
I know it's broad.
Look, quantum is very real, and there are two absolute leaders in quantum that absolutely own this space, have spent tens of billions of dollars, and one of them has a decade of experience of it. One of them has 40 years. And those companies are called Google and IBM. And when quantum happens, they will be there and they will take full advantage of it. These other companies are the equivalent of someone who has an idea about quantum, raises some money, and they're going to take a crack at it.
Yeah.
And the problem is quantum, I do think, is real. I don't know whether it's 2 years or 20 years away. I'm going to wait for Google to tell me, because Google's the only one that really knows. Google and IBM know when this is going to happen. IonQ and Qubit and Rigetti, who all need to raise money, who are losing massive amounts of money, barely have any revenue, et cetera, they're going to continually say, oh, it's soon, it's soon, it's soon. Why? Because they need to raise money. IBM doesn't need to raise money. Google doesn't need to raise money. They'll speak the truth to it. Right. So, I was looking at, I didn't post this. Someone said, maybe it was an analyst, said that quantum by 2030 is a $20 billion market. And then they threw up a table showing the market cap of Rigetti, IonQ, all these. And it was like a $50 billion market cap for these jokers.
Right.
And, IonQ, let me just put it up here. Yeah, IonQ's got a $20 billion market cap by itself. So, look, IonQ is the fart coin of quantum computing. Okay. And I have no problem. So someone said here, you can't use technical analysis on altcoins. I actually disagree. I think they trade great technically because that's the only thing they trade off of.
No earnings call.
And the only difference between IonQ and Fartcoin is IonQ will go bankrupt and Fartcoin won't.
Yeah.
And so, I've got no problem with you trading technical setups in small caps, meme coins, etc. Just know what you're trading. So if you really want to play quantum, we just closed out a great trade in IBM. And by the way, we closed it out a day early because the next day they said they were doing quantum computing with HSBC or something, and the stock ripped 3% that next day.
Yeah.
Just know what you're doing. So I have no problem with speculation in the quantum guys, but you want to know the stocks that are going to be down 90% in the correction, the real correction that comes, whether that's a 20% bear like 2022. So in 2022, the NASDAQ was down 35. In 2001, 2002, it was down 75. We have one of those things in front of us after this meltdown. Okay. I don't know which, but I will tell you in both of those, IonQ, Qubits, Rigetti, they go down 90%. So again, if you own them, great. I would sell some right now because they're super extended. They're great trading vehicles. And the last thing, this is the very peculiar thing, as cautious as I sound a lot of the time, there are no other markets other than late stage bull markets where you can buy something and make 500% in a year. Go pull up Robinhood. Like, again, my readers, and this is from before I joined Paradigm, but they're up 500% in less than a year. That doesn't happen. That's not normal. Okay. That's the exception, not the rule. Now we know how to respond to that. We know how to trade that. But yeah, just like I just be careful. Be careful. Yeah. It's the more you're making, the more aggressive you should be, and the higher your caution should be. I know that seems perplexing, but yeah, I think these things are just a joke. And right now they're an easy call. I would be taking profits if you could. And I'd even consider going long puts on them.
Yeah, I mean, not to be too dramatic, but maybe we're in a situation where this is just sort of rhymes with .com, where everything that they were predicting, during the 90s internet boom came true eventually. It just, everybody got ahead of themselves, and you had your pets.coms and then you had your Amazon.coms, and the clear bigger winners than the ones that died off, that lived in bubble land.
It sounds like a broken record, but railroads and radio and electrification and TV and computers, 1960s, and the internet, it all played out exactly the same way. Mm-hmm. It was very real. Capital flooded into the space. Too much capital came in. It got overbuilt. It had a big correction, and it was 100% right the whole time.
Yep.
This is just human history. And I get a kick out of people saying, well, you're wrong. These stocks are at all-time highs. Well, no, that's actually my point. And I get a kick out of, and I forget where I was doing this at this point. I was doing a call yesterday with just a buddy. And I was saying, people say, well, Jensen Huang knows more than you. And Jensen says it's going to go up $100 billion of CapEx every single year incrementally from here. I'm like, well, what's Jensen supposed to say?
Right. Yeah.
Is Jensen Huang supposed to say, you know what? We really think people have probably bought too much and we're not going to sell them anymore for just a couple quarters. No, Jensen's because Jensen's right about the 3-year, 5-year, and 10-year,
Yeah.
and what's Sam Altman supposed to say? Well, Sam Altman's supposed to say, oh no, AI is going to cure death in
Yeah.
6 months. We just need $5 trillion to build the computers,
Yeah. Just write me a
right?
check. Yeah.
Because that's what's in his best interest.
Yeah.
So and there, it's not fraud. It's Sam Altman's talking his book, Jensen Huang's talking his book.
Yeah.
Meanwhile, you get people that aren't talking the book and they say, yeah, no, we'll see. So I think what's going to happen, I actually don't think the hyperscalers, the traditional, where we've gotten to now is when this was Meta and Google and Microsoft spending the money, Amazon, I feel pretty good about it. I think that they're going to be, they're out a little bit over their skis, but they're fine. When it's OpenAI spending $500 billion they don't have. I just posted this. I forget where I post things. I post so much stuff, but OpenAI in the first half of this year did 4.1 billion of revenue and lost 2.5 billion in cash in the first half. This is a company that's now officially on the hook for $500 billion of money out the door. 500 billion. They did 4 billion of revenue. 500 billion in the next 5 years is what they said they're going to spend. So if I said first half of 2025, you have a company that did 4 billion of revenue, lost 2.5 billion, and they now are going to spend $100 billion per year for the next 5 years. Do you think that statistically makes sense? Is that a logical, highly probable, I'll even go so far to say possible outcome. I guess it's possible, but I think it's a real low probability bet. So this is where we are with NVIDIA, with Oracle, which we've crushed it on. I just think we've entered that phase. But as George Soros said, here, I want to get the exact quote because I hate getting the slight quote. I should just put this. I'm gonna take this quote. I'm gonna put it up on my screen for now, for the next 6 months. When I see a bubble forming, I rush in to buy, adding fuel to the fire. That is not irrational. Okay, that's what Soros said,
Right.
And he's right. But you know what? Soros was a great trader. He wasn't an investor. Soros never claimed to be an investor. He's not Warren Buffett. He's the anti-Warren Buffett. He's a trader. So Soros would do, and Stanley Druckenmiller would do what we're saying: ride this wave, get in there, but you want to tighten your risk controls as vol goes up, not the other way around.
Right. Yeah, and it's not to say that I'm not going to trade the quantum stocks. I'm absolutely going to trade the quantum stocks if they break out and keep going. But again, going back to, and we don't want to be a broken record here, but going back to what we were saying earlier, it's holding those two ideas and understanding where we are in the cycle, understanding the markets, understanding human nature and herd mentality, and how it's likely to play out. We don't have all the answers, but we have a pretty good idea of how things will eventually happen. So as long as we understand that, I think we're in a good place to continue playing these breakouts and running with these trends.
I love what you just said there. It was just a qualifier that I think you kind of threw in without thinking about it, but it's so powerful. We have a pretty good idea about how things play out, right? We don't know exactly how things play out, but we got the broad strokes. And that's the point, is that understanding those broad strokes is what can keep you alive. Do we want to? So I feel like we haven't done it in a while. Maybe you did last time. Do we want to take some? Do people want to throw some tickers?
Yeah, we can do that. Absolutely.
I'd love to get. So someone was asking here. I'll just take one. Pull up Oracle.
Yeah, I have Oracle up right now.
Oh, I didn't even see. Sorry, I'm actually looking at the comments. Not even. Someone's asking. Look, I think this stock goes to 260. I think that there's 30 points down on the stock, and I think that the stock has a good chance to get in there. Where is that? Okay, so look, there's the 50. I think it goes to the 50-day moving average. I think it gets there even if the market corrects the next 4 weeks. This is 260 in the next 2 weeks. If the market goes to new highs, this will visit 260 at some point in the next 6 weeks. So I'm not doing a darn thing. Normally, I actually maybe would have taken some profits on Oracle at this point. Given how much that I'm up and we're up, I'm not doing it. This is a 1 out of 10 positions where I'm like, nope, I'm letting it ride. So I think Oracle goes to 260, and I maybe more. Meaning if it went to 240, 250, the chart would be fine.
Yeah, no, I can't disagree with that. I mean, filling this massive gap, you can see it's starting to fill it. The 50-day looks like a magnet, and it's also those prior highs there from July. So very logical spot for it to go down to. Not the end of the world. Um, let's see what else. I'm making a list now.
We got a lot of Maverick ones in here. I'm going to save those for the Maverick
Okay.
call tomorrow. But maybe we'll take one that I just know a lot of people have. Can we do USAR?
USAR. Yeah.
That is a Maverick one.
Okay, sure.
Look, love this chart.
Yeah.
Was really thinking about adding a lot more on the pullback in this case, to the 50-day. Think it's great, and think you get an announcement out of the U.S. government before year end, and I think the stock goes above 20. And there's a chance on the announcement. Pull up LAC.
Oh, that's another good one. Whoa.
Look at what LAC did.
Yeah.
LAC went from 3 to 750. So when I say USAR is a bigger company. When I say USR could go above 20, what I actually think is it could go to 30. Is it going to stay at 30? No. But I like this, and I'd buy it on the pullback here, and we've continued to like it, and I might get more aggressive because I'm going to continue to get more aggressive all of the next 4 weeks.
Yes.
Every week I'm going to get incrementally more aggressive. If the market goes higher, I'll get more aggressive. If the market's flat, I'll get more aggressive. Market goes down, I'm going to get a lot more aggressive.
Yeah.
But that's how you play this.
Yeah, I love this chart too. I love how it's, a beautiful series of higher lows creeping up. It's obviously hitting supply at 18, but once it churns through that, this thing is a rocket ship waiting to happen. At least it looks like that to me. Let's see, Space, SPC.
I have not. We traded this back at Empire. We made a crazy amount of money on this. I haven't looked at this stock. I actually went out to New Mexico with Whitney, and we visited the facility.
Oh, nice.
Yeah. Wow.
This former SPAC darling right here. I remember when it first came on the market, I was like, what the heck is this?
We crushed it in the stock. I made one guy $10 million in this stock back in the day.
Bad.
So let me do one thing on Space, though. Let me just take a look at something before we go further on it. The chart looks interesting.
It does.
But here's the thing. Space has burnt $300 million in the last 12 months, 291 million of cash, CFFO. And Space has on the balance sheet 560 million. So with 500 million of long-term debt. So I just wanted to throw that out there that this is a company that needs cash. And their debt's due in 2027. So that's just one thing to think about. All that being said, that's an attractive chart from a trading perspective. But
so at risk of some offerings along the way.
Well, no, I'm going to say it's different. If it doesn't go out of business, it's 100% because they do a big equity offering. Sure. Okay, if you're saying no equity offering, you're saying bankruptcy, basically. But in the next 2 years, this company's going to do a big offering. That being said, chart looks pretty attractive. I could see it getting a bid. It's been popular in the past. And let me just look at one more thing. Short interest is 20% of the flow. Woo. That is kind of an interesting speculation.
Yeah, no, I love how it's coiled here, and it keeps on tapping that 200-day. It feels like it's setting up for potentially a big candle to appear.
I think this is a very interesting speculation. I'm going to tell you something else, and it's not the same at all, but there are some swaths of similarity. This reminds me a little bit of the Open Door situation. Ooh. And the reason I say that, when I just bought Open Door as a lark at $1.80 when I heard about it and sold it all at like $6. It was too crazy for me to even recommend. But what I liked about Open Door was people had muscle memory that they could remember from before when the story was more settled and was running. I feel like people could come back to Space really quickly because they go, oh, I remember 5 years ago, I crushed on that stock.
Yeah. Boom,
this thing's at 6. It's a really interesting speculation. Too speculative for what we do at the Maverick, but I kind of like that one.
Yeah, I'll definitely be looking at this if it starts to break out. And like you said, I think it's important to put things into context like that. This was basically a meme stock runner in the past. It's going to have that emotional trigger for people, and it's got a great ticker. Space. I'm a big fan of great tickers. I think that's my best fundamental analysis.
Well, I've actually had I said this the other day on a call. I've made money in ticker BRO, and I've made money in ticker BROS. So bro and bros. I've made money in FANG.
Yeah.
Yeah, I'm with you on the great tickers. Let's just go for great tickers. New
Sticky.
strategy.
People remember them. It's a real thing. Again, it's human nature. It's something people can latch onto and remember, and meme stock potential right here. And if we get a melt up like we saw last year post election into the holidays, this is definitely one of those ones that can absolutely fly.
So I have to say something. The Rigetti, someone just asked, would you sell Rigetti here? Holy cow, yes. Please, if you own Rigetti here, please, I'm begging you, take some profits, my friend. Like, pull up the Rigetti chart.
Yeah. Yeah. I mean, again, it's the same chart that we've been looking at with the other quantums.
Take some profits on that. If there's one thing you do, go. So look, I got 2 trades for you here. The what I say, BITX, ETHT,
yes.
SOLT, and sell your sell some Rigetti. You won't regret it. You won't regret it.
You won't regret it. Yeah, there you go. Oh man, we're making jingles now.
Ooh, wow, that was rough. Sorry.
No, I like that. I like that. That's great. I mean, yeah, and it goes back to what do you always say, Enrique? If a stock doubles in a couple weeks, this is a couple weeks.
Yeah, look, if a stock doubles in a year, you probably should buy more. If a stock doubles in a week, you should probably sell most of it.
Yeah, I'm looking at 15 to 30 here. That's a double. So
yeah, I didn't. That's 50, there you go, in 2 weeks on a company that I think goes bankrupt. So
there you go.
That makes it even easier.
But again, going back to what we were saying before, great trading stock. Nothing against trading when it sets up. Nothing wrong with that. We're swinging at good pitches, and that's what it comes.
And I'm going to give you the other analogy. I've done a bunch of calls recently. This is a little bit when we talk, and I'm talking a 16-month view here, because with the AI bubble and everything that's going to happen, this is like surfing in front of an incoming hurricane. Like, the best waves you're going to see in your entire life are going to be when a hurricane's coming in. And the problem is, if you stay out in those waves too long, you're going to get hit with the hurricane, you're going to die. And that's what trading is like right now. And that's what trading is going to be like for the next, I think, 12 months. Is some of the best opportunities you're ever going to see are we're getting to take it from 15 to 30. But the key is you take the profits at 30 and you move on to the next one. Yeah. And that's what we keep on doing. That's why we keep rotating here. Yeah. Like going in and so sell your gold, buy gold, sell your gold, buy gold. That's what traders do. That's also, and I'll give this because people can talk about what do we do here? We talk about trading. Okay. Trading is a disciplined short-term approach to the markets that can consistently make money in any environment. So I have 2 strategies. One's investing. In my investing, I just don't touch anything. I don't want to, I trade a lot or don't trade at all. That is stuff. And I hold things for 2 to 10 years, and I don't want anything that can't go up at least 300%. Not interested. That's over there. But trading is in some ways better because I do the same annualized returns in my trading. But the difference is when the market goes down, you know what we do in trading? We make money. We actually make money. In my long-term portfolios, I might be up 50% of the up year. I might be down 30% of the down year. I'll do better than the market. But that's the key to trading, is understanding that you can make it's all terrain. You can make money in any environment, but it's a different mindset.
Yeah, absolutely. Yeah, that's all great. Another one that just came in, which is interesting because we're getting a little bit of news speculation, and these are definitely meme stocks too, but the pot stocks have woken up in a very big way again. Do you think this has legs?
What's the next? Tilray.
Tilray was one of the ones that was posted. This looks a lot like what were we just looking at? Okay.
So I have a very clear view here.
Okay.
What I like about why Oklo IonQ and Rigetti work so well as speculative stocks is they have a huge market opportunity and they have no numbers. They can't miss numbers. They have no revenue. They're not expected to have revenue or earnings for years. So they're going to report the next quarter. You know what they're going to report? No revenue. And they're going to report, yeah, and we're signing all these deals with a bunch of companies that may or may not exist. Great. There's the news flow. Tilray has earnings-ish and has had negative earnings revisions for, like, you know, I'm just pulling up if we were on the Maverick, I could pull it up. I'm going to pull up the revenue for Tilray. So the reason why the pot stocks have stunk isn't because of regulation. It's because they've been terrible businesses.
Yes.
Tilray, in this time in 2022, for this year, for 2026, was expected to do 1.65 billion of revenue. Tilray's on track to do 858 million of revenue. It's been cut by half expectations. So and it's gone straight down. It's been going down all year. At the beginning of the year, they were expected to do almost $1 billion. Now they're expected to do 858. When earnings revisions bottom, I think these stocks can go up fivefold. They're still going down. They're a trade, and I buy them when they're down. I wouldn't touch them. And I don't see anything, whatever. Donald Trump tweets out, hey, I just smoked a spliff. I don't think that's is enough to turn around the earnings on these companies.
Fair. That's fair.
So this is the difference between speculation. These are different types of speculation. If you're telling me you're buying Tilray at 40 cents, okay, I still think it's a terrible idea, but I'm more behind it. Here, horrible idea. Wait until numbers stop going down.
Yeah.
They've just been terrible businesses. I think that IonQ and Oklo aren't terrible businesses. They're no business.
Yeah.
When you got no business, it's hard to miss. What are you going to do? Not put out enough press releases?
Yeah, trading on vibes.
It's vibe trading. There you go. These are actually real businesses that have terrible, terrible results.
Right. And aside from some pandemic buying during the brief lockdown bubble that we had, these things have been going straight down for 8 years.
It's just a terrible business. Eight years makes a trend, I think.
I think
I would go with that. Like, the trend is your friend. Physics,
Yeah, that's very fair. Last one up here. It's getting late. Alibaba. China is just rolling right here. We have a K-Web position that looks really good over at the trading desk. I mean, this is extended for sure. Let's not lose sight of that.
I have no comment on Alibaba for very specific reasons. But
okay.
There you go. I think, but what I will say is this: I think the China story is very interesting. I think Baba's a very interesting company. I think the stock is overbought. But could this be a $300, $400 stock, $500 stock? Absolutely.
Yeah. I really like China right here. Technically, the Chinese internet stocks all look really good to me. So I'm riding that wave for as long as I can. Let's see. We got a couple minutes here. CGC, isn't that another pot stock? I'm pretty sure that's a pot stock. CGC. They're all kind of this. It doesn't look as good. I mean,
yeah. I mean, look. So let me just go to the earnings revisions, because, like I said, the problem for the pot companies is they actually have revenue. If they just said we're going to invent pot, but we won't have it for 5 years, then they'd be a lot better stocks.
Yeah, no, that's very true. And when it comes down to it, like you said, overall, I feel like it's incredibly difficult business that they're in.
This is even worse than Tilray. I haven't looked at these stocks. Wow, I'm going to need to take a shower after this.
No.
3 years ago, this year in 27, they were expected to do 1.6 billion of revenue. Now they're expected to do 318 million of revenue. I mean, this is disastrous.
Yeah, it's oversaturated market. The state line stuff, like makes these businesses tough.
So look, I know we're going to get to the end here. We've been pounding some of the same subjects. I just kind of want to go through this. We are in a point where I think we're going to have some of the best trading opportunities that we'll see for the next 5 years. But it's also one of the most dangerous points, and you need to really embrace this living in two spots. embracing being aggressive, but embracing trading discipline. And that means when stocks, you want to buy stocks that look like this, but you want to sell them when they look like that, that little spike at the end. And you want to buy stocks that look like this and then kind of go like that. I wish I had a whiteboard. Maybe I got a whiteboard over here.
We got
it. But just stick with that and you're going to be fine. Just remember, be nimble, aggressive, but with caution is the is probably the thing. But I'm excited. I think we got it. We think we got a great few months ahead of us with a lot of opportunities.
Yes, definitely. Great note to end on right there. Thanks again for coming on today, Enrique. We'll talk next week during what I assume will be a government shutdown. We'll see how that goes.
Go Yankees.
I can't say go Yankees.
Come on. We'll make a bet next time. I'll make you say go Yankees.
Oh, no. Okay, fair enough. All
Thanks,
right,
everyone.
Thanks for tuning in.
Take care. Bye.